what's good now? You guys hear me now? It's like my computer took the week off and I have nobody here to help me, so it's all up to me to put the smart hat on and figure out what to do. Give me just a second to get set up. If you're watching this later on in the day or evening or another day, go ahead and fast forward a little bit while I get this set up. Or did you know, actually my brother showed me this cool little trick. You can watch in double time. Never even thought of that. So you can watch like tutorial videos, things like that, in like twice the speed, and you don't have to stick around. So feel free to hit twice the speed button if you're watching a little bit later. Just one moment while we're getting set up here. The markets finished a little bit lower today. Not such a big deal, I don't think. We'll see. Big focus was on the treasuries. So the 2-year, 10-year, we'll get to that in just a second, but a little bit of a concern there. So if you have questions along the way while we're doing this, feel free to ask. I will get this set up and we'll get started. You guys were pretty passionate on that credit card thing the other day. I'm not saying you can't have a credit card. If you want a credit card, go for it. I'm just saying we know there's no real reason to have one. If you think that it's a rewards program, I'm just going to disagree with you that you are telling the truth, that you actually pay it off on time. I'm sure some of you are. And actually there was a great comment. Someone said, you know what, maybe your viewers are just that smart and they are above the average, which is why most of them comment, I pay mine off on time. And that makes sense. I will take that credit and enjoy it. Let me slide over to the charts here. Let's get this thing rolling. You guys have been patient with me, so let's knock this out. The Dow was down 201 today. That's what you're seeing on the screen. The S&P sold off 22 and the Nasdaq 100 was lower by 91. Here is the deal. Most of the Dow's performance today was because of Apple. Apple sold off down into the 200-day moving average, which is the red line that you see on the charts there. Also some technical support if you like that sort of thing. The stock was down by 4.10% today. The reason Morgan Stanley basically said iPhone sales for this June quarter was basically going to disappoint Wall Street. They were just following up with what Taiwan Semiconductor said yesterday. So the sort of negative news, the negative assumptions are starting to pile on with Apple, which is a real shame because over the last 2 days, it's lost about 7%. The other reason it's a real shame is because good old General Electric was trying so hard today. Earnings and revenue came in better than expected. Company basically said everything was good going forward. They had some positive comments about the restructuring, which in my opinion most likely was caused the both buying from the new investors giving it a shot, as well as buyers that were just covering their short positions. So unfortunately, General Electric, best performer in the Dow there, but because of Apple, no one's going to remember this day as General Electric saving the Dow when it was falling or something. So sort of unfortunate for them. They just cannot catch a break at the moment. Let's keep moving here. We'll go over to the banking stocks. They were slightly higher today. You know what? They closed almost flat on the day. So I'm not going to make any good comments about that. The reason the bank stocks were mostly higher today was because of the short-term rates. Here is the 10-year rate you can see on the chart. Basically 10-year yields pumped up to new highs, higher than in February. The focus was on this high set back over here, which was late February. Yeah, February 26th. We have now made a new high. That spread between the 2-year and the 10-year is starting to get tighter and tighter. If you follow bonds, you find that that's interesting, then great. If not, don't worry. We'll keep track of it for you. Here's the 30-year bond, also heading back to new highs as well. Not quite there, so not moving at the same pace. Nonetheless, banks enjoyed a little bit of strength on that news anyway. What else? Okay, let's go through your investments for the week. Commodities pulled back a little bit, but they continue to do really, really well. Anything interest rate related, of course, is going to suffer just a little bit while the markets continue to sort of push through this. Here's the commodity, yeah, you can see it. The commodity ETF on your charts. It made new highs this week and just pulled back a little bit. Not really a problem there. If we go to energy, really the most shocking one out of the group. I can't believe how energy's been moving lately. I'll take it. right? I'm not complaining, but that part of our portfolio did really well this week, so no complaints there. Tech did mostly okay, but unfortunately, it gave back most of, if not all of the gains by the end of today. So a little bit of a pullback there. This is going to continue to chop around because the technical traders go, you know what? Look at this. Do we have a little trend going on here? And so technical traders start drawing this. Now, we've done this before in this sort of daily class thing that we do. You know what that looks like, right? I'll go back to the commodities ETF. We drew the same thing there. I'll go back to, what was it, oil, the price of oil. We drew the same thing there, right? So we know that what's going on over in, let me go back to it. What's going on over in tech, hey, it didn't save, is basically the same thing, right? So we've got this thing here. There we go. All right, technology today is getting the best of me. Okay, there we go. So we've got basically the same thing going on over here. So you get the idea of what I was trying to say there. So a little bit of pinching there. It's going to be choppy for a while until we break above or below. Let's hope that we break above here in the short term, but either way is totally cool with us. What else did I want to cover today? That's about it. You know what? I mean, a lot of this stuff was sort of off to the races in the beginning of the week and sort of fizzled out at the end of the week. Let me point out a couple things here. We are, if you're paying attention, going into next week is going to be the busiest of the earnings season's week. So for the S&P 500, almost 20% of everyone that's reported so far, or 20% have reported so far. Most of them have beat or been above expectations for Wall Street, so it's been pretty good. Actually, 81.5%. Going back 3 days, remember we started saying 3/4, then 78, now 81. So the number of companies that are beating expectations continues to do better and better. However, that's only 20% of the S&P 500. Next week, we have 1/3 of the S&P 500. The lion's share of the S&P 500 will be reporting next week. It will be exciting, I can promise you that. So we got big names coming out next week, and it's just going to be a slew of them, nonstop. So I hope you're around and you have some time to pay attention. A couple questions here, and then we'll get out of the way. Thanks for being patient with us, by the way, with the technical difficulties. Kevin, every Friday investors sell off. Isn't that bad for their taxes? Well, I mean, it depends on what you're doing there. So short-term traders, not really much of a concern. They know how to handle the taxes. Long-term investors, I don't think you see them making those adjustments on a weekly basis. I really don't think you see them making adjustments. But from someone from a tax-advantaged account, really doesn't matter. I think they would be over-trading or sort of chopping up through their account, but it's possible. They're allowed to do that. Keep in mind there's a lot of short-term traders too, people that just trade for fun or for extra income, and as they make that income, they know how to handle their taxes. If not, they're going to be shocked when tax time comes around. Mark says, not happy with earnings season so far. What disappoints you about earnings season? What's the part you're disappointed with? We've got 81.5% of the companies saying so far that they've done better than Wall Street's expectations. You just wanted a little more excitement? While I'm waiting for Mark there, hey Dustin, do you watch the financial education video there? Something I like to watch as well as you. Which financial education video? Help me out there. Help me understand. In the meantime, I will... basically, we'll wrap it up. We got a busy week next week. We are working on the classes for you for personal finance for all of our customers. We're starting with budgeting. So I've already got the whole schedule laid out, how we're going to do it, and get it kind of sent out to you guys. Really, really excited about that. It's taken everything I have. I've been scripting and setting this and getting all the facts and stuff since the beginning of the year. So we're coming down to the home stretch. Really, really excited. Anyways, if that's it, if there are no more questions, I will wrap it up. Thank you so much for being patient with me. Have a great weekend. I hope it's a good weekend for you and there's no snow. We'll talk to you soon.